Let's welcome on board on that note Satish Pai, the MD at Hindalco Industries, joining in on the show right now. Satish, hi, morning. Let's first talk about the India operations. Your aluminium upstream shipments were flat on a sequential basis, but downstream and the copper segment have reported strong volume growth and EBITDA per ton expansion as well. What's the demand on ground and what kind of volume growth do you anticipate for your India operations for the full year?
So I think that both aluminium and copper, the market demand in Q4 was exceptionally strong. That's why you will see that copper had a record EBITDA and a record sale of 135 KT, and the aluminium downstream also picked back up sharply to 105 KT from the 90 level. So I think that going forward in Q1, we are already seeing the market demand to be very strong. And the downstream aluminium should go to more than 450 KT this year. And the copper side as well, we'll have another repeat of over 500 KT of sales. But all sectors, especially driven by the strength in the Indian economy, the demand for both aluminium and copper in India is very strong.
Satish, coal prices. We've seen e-auction premiums which have fallen significantly in the last few months. Given that the impact of coal prices gets reflected with a lag, how much could India operations margin expand in the first half of FY25?
So as you said, if you look at Q4, we did a record 32% EBITDA margin on our aluminium business. And I think that in Q1, we should probably do better than that because prices are good. Our cost of production is going to be a couple of percentage points lower than Q4. But that being said, I have to caution, it's very hot. Power demand is going up. We are going into the monsoon period. So we'll have to wait and watch and see how the coal prices respond. Right now, there is sufficient availability of coal. And as you said, the prices are also under control.
Mr. Pai, morning. Now that you're sitting on net cash, what is the plan to capitalize this balance sheet position? And what are the domestic capex plans, backward integration plans, any inorganic acquisitions?
So we have quite strong organic capex plans, both in aluminium and copper going forward. I think this year our capex guidance is about 6,000 crores. And I would like to say for the next couple of years, it's going to be in that 7,000 crore range. We are doing an alumina refinery, a copper recycling plant, copper foil, aluminium foil. We are going to open 2 mines. So we are going to have a very strong capex program over the next few years. And that is going to be possible because of the strength of our balance sheet. And hence we will not need to borrow, but we'll do it with internal accruals.
Sure. So apart from coal, how have the pricing trends been, and is cost of production likely to come down further, you think?
So I think apart from coal, if I can say, if you take CP, coke, pitch, all of these on a year-on-year basis are nearly 28% down, caustic. So certainly the input costs, coal and non-coal input costs have all come down sharply on a year-on-year basis, which is why there is a margin expansion in our business, both in aluminium and copper.
Trend of margin expansion, do you expect it to continue going forward as well?
Yes, we do expect it to continue this year.
And finally, what's the outlook on Novelis' operations and the upcoming IPO? What kind of volume growth are you penciling in?
So as you said, unfortunately, due to the federal securities regulations and the quiet period, I cannot comment on Novelis on this call.
Sure. Great to have you on the show. Thank you so much for taking the time out and speaking with us regardless.
If you like this video, then like, share and subscribe to ET Now.